The child tax credit is a federal benefit designed to help families with the costs of raising children. Let's break down how it works. It is important to remember that a tax credit is not a deduction. It reduces your tax bill dollar for dollar. For most qualifying children under 17, the credit can reduce your federal income tax liability by up to $2,000. To claim the credit, your child must meet specific requirements regarding age, residency, and their status as a dependent on your tax filing. Unlike a deduction, which lowers the income you are taxed on, a credit directly subtracts from the total tax you owe the government. The credit begins to phase out for higher earners. These thresholds determine when you start to lose eligibility for the full benefit amount. Tax laws change frequently. Always consult the official IRS website or a tax professional to ensure you have the most current information. Thanks for watching. Understanding tax credits is a great step toward managing your family finances. Educational content, not financial advice.